Zeifmans presents Masters of Disruption, dialogues with emerging industry entrepreneurs. Join our host, Zeifman's partner, Larry Zeifman, for this week's final episode on blockchain and cryptocurrency.
Welcome to another episode of Masters of Disruption, podcast series brought to you by Zeifmans. I'm Larry Zeifman, a partner at Zeifmans, and we want to thank you for joining us. Today, we have two great guests to talk about the blockchain and cryptocurrency space. We have John Weissblatt and we have Jonathan Hoyles, and I'm going to call on each of them to introduce themselves and tell us what they do. John, please.
Thank you for having us, Larry, today. It's a pleasure to be here. So I'm John Weissblatt. I am the co-founder and the CEO of Liquid Meta. Liquid Meta is a private company operating in the crypto/DeFi industry. I've spent all of my time and career in traditional finance, formerly as a portfolio manager, an institutional portfolio manager. And I've recently, well, not very recently, but over the last 24 months, have really started to go down the rabbit hole of the whole decentralized finance industry. So Liquid Meta, it was created on the premise of really creating a company and products to bridge the world of traditional finance. So people like myself, the vast majority of people that study finance in the world. And it's a bridge to connect those types of people, organizations, and institutions to this emerging world of decentralized finance.
Thanks, John. And Jonathan.
Thank you, Larry, for having me on the podcast. My name is Jonathan Hoyles. I'm the CEO of Perk Labs. Perk Labs is a publicly traded company. We're traded on the CSE under the symbol PERK and on the OTCQB under the symbol PKLBF. And Perk Labs operates Perk Hero, which is a mobile payment and e-commerce marketplace. So key to our marketplace and mobile payments is that every time you're making a payment or making a purchase, you're earning digital cashback rewards. And so I've been the CEO at Perk Labs since 2019. Prior to that, my work was as a securities lawyer. So I practiced law at two of Canada's largest law firms and practiced in securities and private equity.
So Jonathan, tell us first what interested you initially in the blockchain and cryptocurrency space?
See, I think like a lot of people, what first interested me was Bitcoin, and sort of intrigued by Bitcoin early on, and definitely someone that after the 2008 2009 crash, paid a lot of attention to things like central banks and quantitative easing and things like that. And I did find the concept of Bitcoin to be extremely interesting. The fact that there's a fixed cap on the number of Bitcoins, and I was very closely sort of following the story of Bitcoin. But really, it was 2017 when I first started really, investing in cryptocurrency, and at the time, Glance Technologies had announced that it had a plan to build a blockchain-based digital loyalty reward, and really what drew me to the opportunity at Glance Tech at the time was a plan to do a legally compliant ICO.
Sounds great. Thanks. And John?
Yeah, so I think what's really driven my interest over the last several years has been the innovation that we've been seeing around us in the crypto space. So innovation's been exponential really in the blockchain and crypto markets since the inception in the 2008 timeframe. So a lot of what Jonathan was saying about the rise of Bitcoin was really when I started to really key in and pay attention. So the products and services that are being built, in this marketplace that cater to a decentralized financial market, and the potential for extreme disruption in traditional financial markets has just been staggering to me, especially somebody who has operated and worked in traditional finance for their entire career. So industries that tend to thrive most have very common characteristics. Number one, they are disruptive to their more legacy counterparts. Two, they have large and growing addressable markets. And three, they can display characteristics of really long-term, sustainable, and strong staying power. And really the blockchain and the crypto markets, they display all of these. So what essentially Liquid Meta has done is we've created a business and a product that, like I said at the onset, is really bridging the gap between traditional finance and decentralized finance. And the mechanism in which we're doing that within DeFi is a term called liquidity mining. And we are essentially providing our own capital on our balance sheet as a form of liquidity to power, decentralized applications and exchanges in order for individuals globally to really exchange assets. And the real thing that's super exciting and interesting about this is a few things. Number one, it's permissionless. It's scalable. It really allows people to move assets, digital assets, across global borders in a very seamless and systematic manner. And without the liquidity provided by organizations like Liquid Meta, these transactions really wouldn't be able to occur.
So, Jonathan, blockchain and cryptocurrency often get lumped together as the same thing. How would you explain how they differ and how it relates to Perk?
Blockchains are essentially software protocols that allow multiple parties to exchange data without trusting each other. And that data can be anything. So it could be account balances of a token or supply chain information such as location and destination information. And you can think of it as updates that are packaged into blocks and then chained together cryptographically to allow an audit of the prior history. Cryptocurrency, on the other hand, you can think of that as, really the most popular application of blockchain technology. Cryptocurrency is essentially a token that is cryptographically secured and can be transferred. And the scarcity of the token is what assures the possibility of value. And one of the great innovations with blockchain is that it solves the double spending problem. So a single account cannot double spend the tokens because the ledger keeps an audit of the balance at any given time, and a faulty transaction cannot be cleared. And in terms of practically, how can you think of what's the difference between the two? For example, Ethereum is a blockchain and ETH is a cryptocurrency. And in our case, for Perk, Perk would be Perk coin would be a token or a cryptocurrency, and we would be building that on a blockchain or software protocol.
And John, you started talking about DeFi, but how exactly would you define DeFi or decentralized finance?
For sure. So DeFi is really a new system of financial services and products that run on public, open source, and permissionless blockchains. And I think Jonathan was, alluding to that a little bit in his prior comment. So unlike traditional financial services, which rely on intermediaries such as banks, exchanges, brokerages to manage and process transactions, DeFi services, it really eliminates the use for that intermediary. They're peer-to-peer and they're encoded within smart contracts and protocols. So DeFi's core principle is that disintermediation of legacy financial infrastructure that is really working to reduce the fees and the costs of financial products. It increases the speeds of settlement times of payments and transactions. And most importantly, it increases transparency via open sourced and permissionless blockchains.
Okay. And Jonathan, what do you believe needs to happen to address the regulators' concerns, I would almost say obsession, about the industry?
The issue there is something, a security is essentially what regulators are looking at. I think regulators are still developing their approach to how to regulate the industry. And I think one of the things from sort of the whole cryptocurrency blockchain movement is people have been sort of become very familiar with the Howey test in securities law. So that comes from a U.S. Supreme Court case, and essentially the test is it an investment of money in a common enterprise with a reasonable expectation of profits to be derived from efforts of others. And so it's a four-pronged test. So you need to have investment of money, common enterprise, reasonable expectation of profits, and has to be derived from the efforts of others. So it's something that I think regulators are still determining their approach to, but there's, for some products, it very clearly is a security and will be regulated as a security.
John, you want to weigh in on this?
I think regulators are worried about who, in fact, is on the other side of a transaction. But like I said, in order for regulators to wrap their heads around what is actually going on in the space, they would like to, have a little bit more clarity on who is exchanging what and where. So I think we'll work towards greater transparency as the market evolves. And I think that the second thing that might be, the backbone of where the SEC is coming from is that crypto markets are a greater than $2 trillion market. I would imagine that a great amount of that money is being deployed that's somewhere in the United States. And there's probably likely a lot of tax leakage and loss of revenue for governments. And I think that as a means for, looking for ways to collect those tax revenues, the governments and the regulators, they really need to figure out the tax situation. So I think that those are the two things that I would layer into to the conversation.
So Jonathan, tell us about the biggest hurdles that you've encountered when building your business.
So, I think with a startup, you're kind of constantly running into, issues or problems that you have to solve. So, really it's a game of whack-a-mole. It's kind of once you solve one thing, you're sort of on to the next.
John?
So I think that the greatest challenge building Liquid Meta thus far, it's quite simple. It's been talent. The crypto markets, the industry has just evolved so quickly. And so there's a lack of available talent, and those that are available are quite costly.
John, what's the number one piece of advice you would give to somebody just starting out in the space?
Yeah, so there are so many. The winds change directions every single day. So what I would recommend to anybody looking to start a business in the crypto space or the DeFi space is you really have to stay on top of all of the emerging trends that are going on around you. And one of the ways that I would recommend doing so is really surrounding yourself with a high quality group of people that are very knowledgeable and sophisticated in the space.
Thanks, Jonathan. You want to add something there?
Yeah, I guess that one thing there's definitely lots of information out there. So I think really just to read up and dive into the space. So there's lots. It's a large community. So there's lots of people to learn from and lots to learn.
So on that note, Jonathan, maybe you want to share with us some closing thoughts and your thoughts on where the space is going in the near future.
Cryptocurrency is becoming more and more mainstream. Recently El Salvador accepting it as legal tender. I think that was a big event. But there's huge advances in new protocols as well. So things like the Solana protocol, Avalanche protocol, the new blockchains moving to proof of stake and being able to do more transactions per second and becoming more efficient in processing. So it's really a fast moving space in terms of acceptance and the technology. And one of the big things that will drive adoption is in the payment space. So the more that cryptocurrency can be used for payments, I see that really driving adoption. And like I said, it's the technology is moving in that direction that transactions can be done more quickly and more efficiently. So that's where I believe that we're headed.
John?
So if we look at the specific vertical of DeFi in which Liquid Meta is focused on and operating within, the industry in just June of 2020 was at a sub $1 billion of total value locked, just a very, very small subset of the overall crypto environment. And today we're looking at a total value locked of 175 billion. And so the growth rate has been extreme. And of all the years that I've spent studying, markets and different emerging industries, I've yet to find one that is growing by, almost 175 times, over a little more than a year. And so I would just say that, with all of that growth, and Jonathan alluded to it earlier in his prior comments, with all of that growth, it's brought in a lot of innovation and all of the interesting and unique protocols. And again, Jonathan mentioned some of them: the Solana protocol, the Avalanche protocol. They continue to, blossom and grow and expand, and the utilities and the capabilities, and all the products and services that are being offered inside this unique niche. They just continue to expand it at lightning paces. So there are so many opportunities for, young and emerging companies and entrepreneurs, that just makes this entire industry a very exciting one to be a part of.
Well, thanks. And I hope that with this discussion, we've helped some people to understand the space. A space that, as John, you just told us, is growing at a pace that we've probably never seen an industry grow. So on that note, I'm going to thank both of you for giving us your time today and sharing your wisdom, and thank our listeners for joining us on Masters of Disruption.
You've been listening to Masters of Disruption. If you have questions or want to learn more, contact us direct at info@zeifmans.ca.